and welcome to today's episode of the Property Pod. My name's Libby, and today I'm joined by Danielle from Fitch and Fitch. Welcome to the podcast. Thanks for coming on. And today we're going to discuss everything you need to know about remortgaging. So welcome to the podcast. Thanks so much.
Thanks for inviting me.
So tell me a bit about Fitch and Fitch.
So we are an independent mortgage brokerage, and we help clients with all parts of the mortgage process. So whether it's a first-time buyer, someone looking to remortgage on a residential or a buy-to-let basis, clients with sort of portfolios that they look after, right through to sort of specialist high net worth lending, sort of, clients that are overseas looking to buy property in the UK. So all areas of mortgages, we are pretty much there to help.
Oh, fab. And what is remortgaging exactly?
So it's a really good question. A lot of people even now still think that remortgaging is just sort of, raising more money on a property. But actually the term remortgaging covers any rearrangement of a deal that's come to the end of its period. So if you took, for example, a 2-year fixed rate mortgage, at the end of that deal, the process would be that if you left it and did nothing, you would divert onto the bank's standard variable rate, which in this market is quite a lot higher than potentially the rates that would be on offer to you in another circumstance. So remortgaging is literally just renegotiating, reshifting the deal that you've got on your property currently. It's a really good opportunity as well to do things like review your term, review your repayment strategies, borrow a bit more. Especially in this climate, it's a really, really good thing to do. So yeah, that is what remortgaging is in a nutshell.
Yeah. And why should people remortgage?
So as we've just discussed, once you come off of the end of your deal, or if you're just sat on the bank standard variable rate, they generally are quite a lot higher than where the rates are in the rest of the market, particularly with residential mortgages. So it's not uncommon to see the standard variable rate sitting at sort of 6-7% and upwards, whereas on a residential basis, if you've got big amounts of deposit in your properties, so sort of 40% plus, you can look at rates that's starting in the 3s. So that's quite a wild difference it can make to people's monthly payments. So much like having your car insurance, or I don't know if people use sort of interest-free credit cards, you take a deal for a certain period of time, it's a good deal. Once it comes to the end of that, it's always worth shopping around because there's a chance you could get something better elsewhere on the market.
Definitely. And when should people start to think about remortgaging, do you think?
So the general rule of thumb is with remortgaging is 6 months before. Once you are within 6 months, most lenders will give you an offer that you'll be able to secure and hold for the 6-month period, and then it will hold to that point. When your deal expires, the new mortgage will then begin from there and you're away. The benefit of doing this is if you were to fix a mortgage in or take a mortgage product today, apply for it, and it was to reach mortgage offer stage, then they would honour that interest rate for you. So even if the rate started to climb and we had more economic turmoil through the summer, the interest rate you've applied for, as long as your situation remains the same, should hold, and you should be able to go ahead with it, which is obviously a benefit for a lot of people. There are a couple of options in the market to do it sort of 7 or 8 months before, but generally the rule is 6 months before.
Wow, I didn't realise it was so much longer, like before you had to do it. I thought it was like, oh, you can just do it now. So that's really interesting to know. That
it happened quite a lot at the end of last year, when obviously at the end of September, as you would have seen in the newsreels, we had a big jump in the mortgage interest rates, and it was sort of, really hot press. Clients that had applied for mortgages in the summer before that happened, that had much lower interest rates, were still able to complete on those deals because they'd applied for them and had the mortgage offer issued by the lender prior to that market turmoil. So there is definitely an argument to get on the front foot and get those deals fixed in nice and early.
Yeah, great. And how does somebody go about remortgaging?
So there's a few different ways that you can do it. So when you have a mortgage that's coming to the end of its deal for whatever reason, your lender will probably offer you some retention rates to stay with them, and they're usually quite competitive. Depending on the lender that you're with, though, will depend on how far out you can do that. Some of them will let you do it up to 6 months, some it's sort of 3 or 4 months, and some it's only a few weeks. Otherwise, you can come to someone like me, like a broker. That's what we do in the market. So say, for example, you were coming to the end, you thought, right, my mortgage is due up in the summer, I want to have a look at my options. You'd come to somebody like me, and I would take all your details, have a really good look at your situation, your circumstances, work out who you are, what your motives are, what you need for your situation, what's going to work for you, and then go and have a hunt around the market. When obviously you're looking to apply for mortgages, you've got to be aware that, there are requirements. So you have to earn enough, you have to be the right age, you have to have the right, income details. And that's my job, is to know that information and to come back and say, right, I've looked around the market, Libby, this is the best market for you, mortgage for you, based on the market and based on your circumstances, and then can support you through the application. It's not as cut and dry as well as sort of, a fixed rate mortgage, although that's what people tend to think about. There are other options out there, sort of, in terms of trackers and discounted that can be viable for clients depending on their circumstances.
It's a lot to think about. I guess it's all your income, and then your I don't know if marital status or like anything like that comes into it.
I mean, things like that certainly can have an effect your financial dependence, and I think as well, it's not as simple as have a look at Money Supermarket and what's the best interest rate on the market. There's so much behind it. So there can be a lot of hidden costs with products like that. So an interest rate can look look slightly better. But if the fee's, a few £1,000s higher, it's not beneficial to you to save that tiny amount on your payment. And the criteria is huge, so making sure that you meet the lender's requirements to lend. There are a lot of lenders and they do a lot of very different stuff, and usually we can find someone that can help a client, but we've just got to really get comfortable with what their situation is and what they need from us.
And what should people do to prepare for remortgaging?
So when it comes to, your mortgage is coming up for renewal, obviously, we're a regulated industry, so we have to make sure that we are checking situations and circumstances and that, your paperwork stacks up. Whether or not we then need to pass that on to the lender depends on the case that we go to, but we in the first instance will always need it. So I always say to clients, start holding on to your bank statements, start holding on to your pay slips, any sort of, rental income, tenancy agreements, any proof of benefit payments, anything like that. It's worth starting to get all those documents together because we're going to need a track record of it, certainly. For self-employed clients, it's worth making sure you've got your final year of accounts in, get them signed by your accountant, ready to go. So we've got those to prove your income figures. So just start staying on top of your paperwork, and definitely just make sure you're reaching out to, discuss your options. With if you wanted to use a broker can look at what your current lender's providing, what the rest of the market's providing as well.
Yeah, good idea to get organised, I guess, with everything.
I think so, yeah, definitely. And I think, it is a very heavily regulated industry, as people know. So we do have to prove things. You've got to make sure your paperwork's there.
Definitely. And how much can someone borrow to remortgage?
So that would depend very wildly on their situation. So when you look to come to do a remortgage, it's going to be obviously the income assessment. What's your commitments like in the background? So we have to look at things like childcare, whether you've got any loans and costs, if you've got any rental properties, second properties, family dependents. For our buy-to-let and our portfolio clients, we have to look at a portfolio and how sustainable that is. So how much income have you got coming in versus level of outgoings going out, and then stress tests can be applied to it by the lenders as well to make sure that if we have any further rate rises, it's going to remain affordable. So it's very different for each client, and it is very, very much a personal thing.
And are people credit checked?
A good question. It depends on the transaction that they're looking to do. So if you're looking to move from one lender to another, generally, yes, there would be a credit check process done as part of it. However, I don't want people who've had credit issues or concerns to be put off from reaching out, because it's still worth it. We can always look at options from existing providers. And also, a lot of the lenders, including the high street lenders, have got a good tolerance for, mishaps or problems on credit files. And we can generally look to try and get around it. If it's a clear reason and there's an explanation and we can see what's happened, then yeah, we can always have a look at client situation.
And where can people check their credit score and rating?
So there's lots of different places that you can have a look online with any type of credit check. The lenders generally would use Experian or Equifax. They tend to be the two companies you can go to, and clients can access them directly themselves on the website. Take only a few minutes to do. Other ones that people are using at the moment, you've got ones like Credit Karma, you've got Check My File, which will show you the report under all three. That's a really good one to go to, and that'll flag up any issues you've got. I think if you're concerned about anything to do with your credit file, it's worth getting a copy of it, give it to your financial advisor, and let us have a look and see what we think the issues are going to be and how it's going to affect any borrowing you want to apply for.
Okay, great. And how much does it cost to remortgage?
Again, it depends on the situation that you're looking to do. If you're an investor looking to remortgage a portfolio, if you're someone who's overseas trying to buy a property in the UK, the fees generally are going to be a bit higher. If you're looking to do your residential transactions, your first-time buyers, your remortgages, then the fees can be a lot cheaper. It's worth saying remortgaging is probably, on a residential basis, is probably the cheapest one to do, and any fees that are applicable usually we can get added to the loan for you. So there's not big amounts for clients to pay up front, because particularly in this climate, clients are going to be very aware of that.
That's really interesting. Thanks so much for coming on today. It's great.
Thank you so much for having me.
And that's a wrap for today's episode. If you did enjoy this episode, please don't forget to like, share and subscribe, and we'll see you next week.